Hey, have you seen this? It's all over the internet showing that 6.1 million Americans are currently behind on their mortgage and that a crash like 2008 is happening all over again. But it's a straight up lie. And in this video, I want to uncover the actual truth behind what's actually happening. But first, for those of you guys that may not know me, my name is Kwak, and my brother Sam and I have helped thousands of people across the country pay off their mortgage faster while saving massive amounts of money and interest in the process. Now, this photo has gone extremely viral with a lot of influencers with large followings, a vast majority of whom are not even experts in the real estate or the mortgage industry, sharing this photo to scream that the sky is falling. At the time of this recording, mortgage delinquency rates are sure cause for concern, but I wouldn't say they're anywhere near crisis levels. At least not yet. Now, keep in mind, considering I got millions of dollars worth of real estate with hopes to buy more, being wrong would be extremely costly to me. Not only that, but a crash would mean that I, as an investor, could buy more investment properties at the fraction of the typical price. So it would be a financially beneficial thing for me. But I'm here to tell you that the data is the data. In fact, the most recent numbers from the Mortgage Bankers Associations for Q4 of 2024 shows that the seasonally adjusted delinquency rate for residential properties, which is 1 to 4 units, was at 3.98%, which was up slightly from 3.92% in Q3 of 2024 and 3.88% if you compare year over year Q4 from 23 to 24. However, if you're watching this and you own a home and you're at least, let's just say 30 years old, and you remember what happened in 2008, you would know that even sometimes a 20% or 30% dip would allow your home and your mortgage to be underwater, causing severe financial issues. And this is where we continue with talking about the rest of this video. Now, with that in mind, here's the kicker. FHA loans are getting hit harder, jumping to 11.03% delinquent in Q4 of last year, which is 57 basis points up from Q3. And this is where, folks, where that photo showed earlier is scaring a lot of people, and maybe rightfully so. And that photo, by the way, is according to a study done by Deets.com, and no, not Adam Sandler, but Deets.com, that states that between 6.1 million and even as high as 6.6 million total Americans are behind on their mortgage. And this is where a lot of big social media gurus are using this to generate engagement on their accounts. But then, if you do even a little bit of digging, you begin to realize that what they're saying is not accurate. Not even close, actually. Because according to LendingTree, there are about 85.1 million mortgages in the United States at the end of 2024. And the Mortgage Bankers Association reported that in February of 2025, that mortgage delinquencies, and they're measuring this on the lowest possible metric, which is just 30 days, the delinquency increased to 3.94%. Now, I know I'm Asian and I'm supposed to be good at math, so I apologize for using a calculator. Sorry, ancestors. But what my calculator tells me is that 3.94% of 85.1 million isn't 6.6 million. It isn't even 6.1 million. It's actually 3,352,940. Now, I know there's someone in the comments at this very moment typing and saying that the photo being shared that's viral is just about FHA mortgages, and that's where the 6.1 million Americans that are supposedly behind on their mortgage is actually coming from. But if you look at the real actual data directly from the Federal Housing Administration themselves, which is, by the way, what FHA stands for, the most recent reported number of residential 1 to 4 unit mortgages the FHA currently holds is 7.81 million. Meaning, if there's truly 6.1 million Americans that are behind on their mortgage, the delinquency rate would have to be 78% instead of the real number, which is actually 11.03%, according to the most recent report from Q4 of last year. But hey, I get it. With so much out there in the internet, it's tough to know what's real. I mean, shoot, even ChatGPT was wrong on this. But it's okay, because Grok AI got it right. Now, with all of that being said, if you look at the data in terms of what caused the 2008 housing crash, the true delinquency rate was actually only at 9.3%. And a lot of economic experts are making the argument that we may end up hitting those numbers sooner than people think. So of course, we have to ask ourselves here, well, what's driving this? Well, for one, we had the highest acceleration of increase in the interest rate that we've ever had in the country, along with inflation that was at an all-time high over the last 40, 50 years. And on top of that, if you're thinking about what's actually affecting you and me, the actual American, we've had to deal with rising costs and things like insurance and taxes that are associated with our mortgage and cost of living, on top of the average American savings shrinking and the consumer debt actually increasing $4 trillion since 2020. So of course, the biggest question that we have to ask is, well, what does that mean and what do we do? Well, there's 3 things that I usually recommend our clients and other people do. Now, again, I'm not a licensed financial advisor, but these are things that I've observed as an 8-figure entrepreneur and investor that work really well for not only just me, but for other people. And the first thing, it's gonna sound really obvious, and it's save. But how many of us spend money on things we don't actually need? And I'm willing to bet that for most Americans, if they just opened up their credit card statement and their bank statement, they're gonna end up finding expenses that they didn't even know existed. Number 2 is something that we all can do, and it's obtain a line of credit. Even if it's something as small as a $10,000 line of credit, lines of credit will actually provide you a lot of liquidity and help you stay afloat during hard times. And last but not least, and this is the most important one, is find fiscally efficient ways to pay off your debt, especially the ones that cost you the most amount of interest, which more oftentimes than not is your mortgage. Now, I know all of those, especially the third one, seems impossible, but it's absolutely doable. In fact, my brother and I's company, Accelerated Strategies, help thousands of people around the country pay off their mortgage in a fraction of the time while saving a fortune on interest. In fact, just last night, we just enrolled a lovely couple, Isidra and Maraka, into our program, and they're actually gonna be saving over $630,000 in interest across all the debts that they have. And we're actually gonna be able to pay it sub 12 years, which is an absolute miracle considering all the debts that they have over a 20, 30 plus period of time. And we actually specialize in those that are wanting to pay off their mortgage as a part of their strategy in nearing retirement age. So if you want more information on that, you're invited to check out the link in the description for more information. There's no hard sell or anything like that. All you're gonna do with that link is just get more information. Now, with that being said, thank you for watching this video. And if you found this informative, please help us out by subscribing and liking this video and commenting your thoughts below. But until then, I'll see you guys in the next one.